His friend had shown him the listing on his phone, eyes bright, like someone who just found a door most people never even notice. A property to renovate, rental income potential, a return on investment he was already calculating in his head in real time. This is where money lives, he said. Not on a screen, in something real, something you can hold, touch, show people. Ritchie looked at the listing. He looked for a long time, then handed the phone back without saying a single word. That night, alone in his kitchen, he sat at his desk and spent 2 hours reading what his friend had never read. Studies, 20-year comparisons, charts where both curves ended up in the same territory by the final year. But one line in one article stopped him cold. The time you invest never appears in the return calculation. He closed the laptop, sat in the dark for a moment, then opened it again. He created an account. He entered his money, he confirmed, and he closed the laptop for the second time that night. His friend, that same evening, was sending photos of his signed purchase offer to every contact in his phone. Ritchie had nothing to send, nothing to celebrate publicly, nothing you could photograph or share or explain at a party. He'd just put money into something invisible, something without a physical address you could point to on a map, something that made no noise, that asked nothing of him, and that was now going to work while he slept. Does that kind of silence sound familiar to you? Ritchie stood up, walked to the window, and looked at the city lights without answering. He had no key to hang in his hallway, no sign to plant in a yard. He had no story to tell the following week, no renovation anecdote, no before and after photo of a restored facade. He had an email confirmation, an account number, and a green line only he could see. His friend had a property in the physical world. Ritchie had something in the world of compound interest. And the 20 years that followed were about to reveal a difference neither of them had named yet that night. His friend had collected rent checks, managed tenants, had anecdotes ready for every dinner table. He had material. Ritchie had watched a line climb 9.2% since January 1st. Nobody had asked him anything about it. Nobody had applauded. Nobody had commented. Nobody had leaned over his shoulder with envy. And yet there was something about that silent progress that asked nothing of him, something almost restful about it. At the office one Monday morning, a colleague asked him what he was doing with his savings. Index funds, nothing glamorous. The colleague raised an eyebrow and changed the subject in under 5 seconds. But nobody asked him to tell a story, and Ritchie didn't have one to tell. That suited him just fine. His friend, meanwhile, was collecting anecdotes, a leak, a difficult tenant, an unexpected repair bill nobody had budgeted for. He told the bad ones with the same enthusiasm as the good ones, as if the problems proved how seriously he took investing. One Saturday in the fall, Ritchie got a text while hiking on a mountain trail. "Furnace just died. I'll handle it, but it's going to eat my whole weekend." Ritchie read it. He put his phone back in his pocket, picked up his walking stick, and kept going without breaking stride. He had no furnace to manage, no emergency contractor to track down on a Saturday morning in the middle of the woods. Have you ever given up a whole weekend for something that was supposed to work on its own? Ritchie stopped briefly, looked at the view, and kept walking. At year end, his friend added up his rent and presented the gross figure with the pride of someone who'd kept his word. But the net figure, after expenses, unexpected repairs, a vacancy month, and miscellaneous costs, was considerably more modest. He talked about the gross number. That's the one you announce. The other one goes in the quiet column of the spreadsheet. Ritchie had a net figure. Clean. No deductions. No surprises in the last week of December. The machine kept running, quietly, without ever sending him an emergency text on a Saturday morning in the mountains. His friend's calendar had started filling with slots he'd never planned for when he signed the papers. Contractor calls squeezed between work meetings, property visits scheduled on weekday evenings, decisions that couldn't wait. He handled all of it efficiently, even with a certain pride. It was his investment. He took responsibility. But if anyone had actually counted the hours from the beginning, the total would not have been a comfortable number. On a Thursday evening at 11 at night, Ritchie's phone buzzed. It was his friend. "Sorry to bother you. My tenant says the windows won't close right. It can wait, but I need to reach the carpenter first thing tomorrow." Ritchie was on his couch, movie playing on the screen. He replied in 2 words and hung up. He had no windows to manage, no carpenter to call between meetings tomorrow morning before 9. Nobody waiting on a decision from him on a Thursday evening at 11 at night. Nobody at all. 3 years in, Ritchie did a quick mental audit of the hours he'd put into his portfolio since day one. He counted on the fingers of one hand. He still had fingers left. Quite a few fingers left. His friend's total hours, impossible to count, because his friend had never counted. And that was exactly the problem. Ritchie said nothing about it. He just filed it away for a future conversation when the timing would be right. What if the return on any investment was inseparable from the time it had cost you? Ritchie closed his eyes for a second, lips pressed together. His friend kept calling it a passive investment. That word had seduced him from the very first article he'd read. Passive. As if the money came without any human involvement. As if the property managed itself after the lease was signed. Ritchie knew of exactly one kind of investment that truly deserved that word, and it wasn't that one. His green line climbed. His portfolio grew. And nobody asked anything of him on a weekday evening or a Saturday morning. Ritchie asked nothing of anyone except time, and the time, every hour of it, he kept entirely for himself. $82,000. His original savings had more than doubled, with barely anything added from his pocket. This wasn't a theory anymore. This wasn't a bet from an article he'd read 6 years ago. This was a fact right there on a phone screen. Money had started making money. Slowly at first, then progressively faster, month after month. He didn't tell anyone. Not because he was ashamed, because he didn't need validation for what he could already see. His friend had just made a pragmatic call. He'd handed management of his property over to an agency, 10% of collected rent and fees. His monthly cash flow had shrunk by several $100s overnight. "But I'm getting my time back," he said over lunch. That was true, except he'd never measured the time he'd lost. Ritchie nodded and made a mental note. You can only reclaim what you first had the courage to measure. His friend couldn't calculate what he was reclaiming because he had no baseline number to compare it to. Ritchie kept going, month after month, automatic transfer, app open for 30 seconds once a week. The line climbed. Sometimes it dipped. A correction, a rough quarter. He sold nothing. He waited. He'd understood something that very few people truly internalize. This machine needs time more than it needs attention. Giving it attention often does damage. Giving it time is always what makes it grow. How many times have you touched something that was working well just because you were impatient or scared? Ritchie set his cup down and touched nothing. By year 8, his portfolio was approaching $100,000, a milestone he'd been waiting for. Not wealth, something more specific. The point where the machine contributes more each year than he does himself. From that moment on, the annual returns exceeded his monthly contributions. The machine had overtaken its owner. His friend had a tangible asset worth real money on paper. Ritchie had a machine that was accelerating. And the difference between the two could no longer fit inside a simple 2-column comparison chart, just one. Simple. The kind of question people avoid asking because they're afraid of what it will reveal. They ordered. They talked about everything and nothing, and then Ritchie waited for the right moment, calmly. "How many hours a year do you spend on your property?" He asked it quietly, almost as an aside. His friend stopped chewing, went silent for a second, then said, "I'm not sure. Not that many, honestly." Ritchie reached into his inside jacket pocket and pulled out a notebook. Not a symbolic gesture, a real notebook with a pen. "Let's figure it out together." His friend looked at him with the mild defensiveness of someone who senses what's coming won't be comfortable. Ritchie wrote down categories: coordinating with contractors, screening and onboarding tenants, move-in and move-out walkthroughs, monthly accounting tasks, unplanned calls, late-night emergencies, back-and-forth trips for key handovers. At the end, the total sat there: 130 hours a year, over 10 years, 1,300 hours of professional-grade work, never invoiced to anyone. His friend looked at the number. "But that's part of the deal with real estate. You work for the asset." Ritchie nodded. "Fair enough. But what does your asset pay you per hour once you include those hours in the math?" Silence. His friend narrowed his eyes. He had never run that calculation. Nobody had ever run it with him before. Ritchie did the math in the margin of the notebook, slowly, using his friend's actual hourly rate at work. The final number sat there on the page, and it was hard to look at directly without feeling something shift. This wasn't a judgment. This wasn't an indictment. It was just accounting. The accounting nobody teaches in any real estate book or investing seminar. The kind that treats your time as a resource with a measurable value. His friend had built something real, a genuine asset, a patrimony. That was undeniable, and he had every right to be proud. But he had also been running a second job for 10 years, without naming it, without billing for it, without ever consciously agreeing to its terms. The lunch lasted 2 hours. The bill was paid, but neither of them mentioned the notebook on the way out. Not the numbers you show people, the ones you dissect, with every column open, nothing left in the shadows. His friend gathered his statements, tax returns, expense tables, 20 years of paperwork, 20 years of decisions. Ritchie opened one app, one screen, one line that summarized 20 years in a single clean number. There was something almost jarring about the difference between their 2-year 20 closing operations. His friend's real estate patrimony was real, solid market value, mortgage nearly paid off, significant equity on paper. But underneath the gross figure, there were 20 years of ongoing charges, unexpected major repairs, months without tenants. There were 20 years of agency fees, legal costs, specialized accounting fees for rental property management. And when you added all of it up, the net cumulative cash flow over 20 years was considerably more modest than the headline number. Ritchie ran the sum. His friend had a hard time looking at it, not because it was catastrophic, because it was honest. Then Ritchie picked up the second sheet, the one that didn't appear in any of his friend's official tax filings. The hours. 1,200 hours over 20 years, at his current hourly rate, a real number, not a symbolic one. His friend had been running alongside his main investment, a part-time job, undeclared, unpaid, without benefits. His real hourly rate across the full arc of the real estate venture was somewhere between an apprentice and an entry-level worker. And if you ran that same calculation on everything you're currently managing, what would your hours actually be worth? Ritchie crossed his arms and waited. Ritchie's portfolio was right there, $420,000, 0 calls, 0 contractors, 0 sacrificed weekday nights. Both patrimonies were in the same ballpark. Within a few percentage points, they'd arrived at the same financial destination. But the paths that had gotten them there had absolutely nothing in common. One had built an asset, the other had built free time. His friend looked at both columns for a long time in silence. There was nothing to dispute. The numbers were simply there, complete, clean, and perfectly, definitively, irreversibly honest. Because he had finally understood what he'd actually bought. Not just real estate, a whole lifestyle with a cost he'd never put a number on. The sale went well. He walked away with a clean, liquid sum, no tenant to notify, no contractor on standby. For the first time in 20 years, he had no pending urgency, no decision waiting, no landlord responsibility hanging over him. And in that unfamiliar silence, a question emerged, slowly, that nobody had ever asked him before. He called Ritchie one evening, not to announce something, just to ask this question out loud to someone who would understand. What generates income without taking my time? Not theory, something real. I want to actually understand this. Ritchie recognized that question immediately because it was exactly the one he had asked himself alone in his kitchen 20 years before. And he realized that night that his friend hadn't failed at investing. He had simply left one column out of his spreadsheet from the start, the time column, the quietest one, the most expensive one, and the hardest to accept when you find it after the fact. Ritchie didn't give a simple answer, because there wasn't one that was both simple and honest at the same time. There is a form of income that arrives without a midnight call, without a Sunday morning emergency, without a contractor to chase. Income that grows while you have dinner with your family, that accumulates while you sleep, that asks nothing except patience. That income has no address. You can't photograph it. You can't explain it at a dinner party in under 30 seconds. But does that actually change anything? If the numbers are there and the time has stayed free? Ritchie let the question hang in the air. His friend stayed quiet on the phone for a long time. Then he said, "I should have asked you this question 20 years ago." Ritchie answered quietly, "You didn't have the data to hear the answer yet. Now you do. There are lessons you can't teach. You can only walk through them. Some of those walks cost you an hours, but they always change the question you ask next, and the new question is almost always the best one you've ever asked." One door had closed behind him, and for the first time in 20 years, another one was slightly open in front of him. He was 29, ambitious, had savings he'd built carefully, and a question he didn't quite dare ask out loud in the hallway. "I've put some money away. I don't know what to do with it. Everyone keeps telling me to buy something to rent out. Ritchie looked at him for a second. He recognized something in that face, something he'd seen in his own 20 years before. So he said one simple thing, one sentence, and that sentence was about to shape the 20 years that followed. Before you decide anything, ask yourself two questions. What is your time actually worth per hour? And how many of those hours are you willing to give up for this return? The young colleague frowned. Nobody's ever asked me to calculate that before deciding. Ritchie nodded. I know. Nobody ever asks you to read that part before you sign. He pulled a few sheets from his folder. 2 columns, 2 trajectories, 20 years of data compressed into 3 clean pages. Not a lecture, a map. The map nobody had handed him when he was 30 and standing at the exact same crossroads. The young colleague read the pages in silence. He took his time. He reread certain lines more than once. And then he asked a question Ritchie hadn't expected. What's the investment that doesn't have a second price tag? Ritchie smiled, not triumphantly, precisely, because that was exactly the right question, asked at exactly the right moment. There's no investment without a second price tag, but some hide it better than others in their marketing materials. And you? Have you ever read the second price tag before committing? Ritchie looked his young colleague in the eyes, calmly, and waited. Every investment has 2 prices. The one everyone sees printed on the front page, and the one that only shows up once you're already inside. The first one, everyone reads. The second one, people usually discover too late, once the clocks have already started without them noticing. Ritchie had spent 20 years reading both price tags before every decision. Not by luck, by method, by a calculation made early and on purpose. The young colleague slid the sheets into his bag with the same quiet focus Ritchie had had in his kitchen 20 years before. And somewhere in that American city, a new story had just begun. The same story, with one more column in the spreadsheet.